Today, I am pleased to introduce a friend of mine, someone I've known for many years, someone who there's a good chance Unbounded wouldn't exist as it really exists today if it wasn't for Joshua and his community, organizing efforts within the Bitcoin world about 4 years ago. And now I am lucky to call, someone who is on our investment committee and a true, partner at Unbounded Capital. So welcome to the webinar, Joshua. Great to have you on today.
Thanks for having me.
Yeah, so I think a good place to start might be, what is your background in the world before you discovered Bitcoin, and what made you so excited about Bitcoin originally? And feel free to take your time with this one.
Yeah. So I worked as a ERP technical consultant at a top accounting firm here in the US. It's formerly known as McGladrey, now it's known as RSM. If you guys know the Big Four, they're number five, which is why a lot of folks haven't heard of them. But I did that for 7 years straight out of college. And what we did was we would travel to clients and do full lifecycle implementations for ERP systems. This one was Microsoft Dynamics AX. Now it's called 365. I was what's called the technical lead, the person responsible for managing the development, doing some dev, but client facing, meaning I would have to, I was usually the only technical resource that was actually on site. Most of our devs were offshore or whatever, and I would manage them. And several of our clients, my specialty was in retail implementations. So some of these clients would have websites as well as online stores or physical stores as well. And we would have to do credit card implementations. And I did that probably 3 or 4 times. So I'm very familiar with the issues of the credit card payment system and the challenges that brings to middle market companies. That was the clients we focused on. And when I saw the price run up in BTC in late 2017, that made me start looking into it and reading the white paper. And the white paper immediately appealed to me because it just made so much sense. I mean, this is something I had struggled with our clients for the last 5 years at that point. So it made so much sense that, this is way better. And it would be way easier to implement, way less risky. Obviously, there's lots of challenges with the whole space today, but that was probably the primary reason that I became fascinated with Bitcoin, was because of that experience. And then that juxtaposed with, okay, this online payment technology that's, Satoshi asserts that it solves a lot of these issues, and I still believe it does.
So how did you turn that interest into action?
Yeah, so for about 6 months, I did lots of research into Bitcoin, as well as, naturally that led into other coins because, the narrative was that Bitcoin doesn't work, which is, the whole counter for why we're here and, why I've joined you guys and why you guys exist is because we think, well, it does work, right? But that journey took 6 months to kind of understand, okay, Bitcoin does work, and then more time to understand the tech. And it just continued to fascinate me, just all aspects of it. I believe it is the greatest payment method that we've ever seen. Unfortunately, the world doesn't view it that way because of all of the different narratives and the Ponzi type nature of crypto and what most people view it as. But hidden underneath is, in my opinion, the best payment system in the world.
Awesome. So tell us a little bit about your kind of early Bitcoin community, how you got involved and how you ended up taking kind of a leadership position in the San Francisco Bay Area, one of the biggest hubs for blockchain development in the world.
Right. So I attended a conference in late 2018. So this was about a year after I started diving in with research. And there I met different folks in the community like Ryan Charles, Dr. Craig Wright, and a bunch of other community members. And from that, and Jason, I forget his last name, he created a social media site built on BCH and BSV. And from that, we were so motivated when we came back that we wanted to do this meetup. And at the time, I was already attending a BCH meetup, but that switched over as Ryan X. Charles, who was the founder of Money Button at the time, he decided to split off and do his own. He he tried to keep it together, but we started our own. So I helped him out with that. So him and I, and along with another individual who lives in San Jose, we would host a monthly, and we try to get kind of a recurring thing because we felt that was important to start it up.
So a couple of these monthly meetups were quite impactful for me and the firm. Can you just maybe share a little bit about what you remember from the first meetups that Dave and I attended?
Yeah, so I recall Dave coming to one shortly after we started, and it seemed like he was looking for information about, what is this Bitcoin really about, BSV, BCH, what's really going on here? And him and I spoke about, some of the big block arguments and scalability, and we kind of connected because he just thought it made sense. And, he mentioned at the time that the previous fund was a little different, and he did say that he would go and talk to you, Zach, and probably bring you back to learn more. And that's what ended up happening.
Yeah, and I talked about this a little bit actually on your podcast and show on Monday. Dave, our partner, kind of wrote about this. Dave, if you want to maybe drop in the chat those kind of early pieces you wrote. But yeah, that was really the formidable moment that got us to really consider, oh wow, can Bitcoin actually scale? And what if the way to scaling blockchain and having it be used by many people is not different layers in a virtual machine, but via the UTXO or cash system of Bitcoin? And, similar to you, we kind of hunkered down and researched for a few months. And at the end of those, few months, we kind of realized, wow, pretty much all of our theses and assumptions and ways we thought about the way Bitcoin and blockchain works were wrong. And we have to really reposition how we're doing our investing at Unbounded. So definitely thanks to you, Joshua, Ryan, and the whole crew there for making that happen. So kind of in this vein, Joshua, you've kind of already used the word Ponzi. Like Bitcoin for most people doesn't mean the technology you and I are excited about. So one of the questions that on Twitter, when I posted, crowdsourcing, who has questions for Mr. Joshua Hensley, one of them was, has the crypto industry destroyed the name of Bitcoin for good? So what are your thoughts on this question? I don't think we've ever really talked about this.
I think they've destroyed it now, but I don't think it's for good. So, I mean, I'm not old enough to recall the .com bubble or the web stuff, but some older individuals have told me stories, and I've seen some videos about how skeptical people were, that if you look back at what they were saying, they sound a lot like the people that say Bitcoin can't work today. For example, a famous one is Bill Gates going on to David Letterman, and they're talking about email, and David Letterman's they're laughing at him. They're all laughing at him. They're like, why would I do that? When I can send a fax or write a letter, right? And another older guy reached out to me and said how one of his clients in the 90s was just couldn't believe why they would ever need to set up a website for online sales. Like, why would we need to do that? They can just fax us and it's all good. So I think it's very, it's easy to look at it, especially as it is when most of it doesn't work, to say, well, it's all crap. I actually sympathize more with those people because they're right about 99% of it. But like I mentioned earlier, hidden beneath is what was in the original white paper, which is this payment system that's capable of breaking down the walls of the existing financial system.
And I think regardless of if the name of Bitcoin ends up ever being a good household name again, I do think, of course, it's very likely that the technology is widely used and ubiquitous, so maybe it plays out where, similar to how we call the internet and not these protocols that were, these series of protocols that were debated and kind of a little bit of accident of history in terms of which ones became the foundation of the global internet today, where maybe we have this new thing where it's just called the blockchain or something like that becomes this ubiquitous public database. And yes, it happens to be a version of Bitcoin, but because of the whole kind of crypto bonanza, it just never really gets that name. So we'll see what happens. Obviously, we're making our bets on the companies and the actual value being created independent of crypto speculation. And we'll see if that value that's being created can end up overcoming this kind of, what people know as Bitcoin, which is just this glorified Ponzi scheme. So in that vein, what do you see as some of the biggest problems with Silicon Valley style venture capital? And Dave might be asking for a few extra links than normal on this this webinar. But our founding partner, Jack Lasky, he wrote a piece last week just before Thanksgiving, feeling pretty inspired by the whole FTX collapse and contagion, on just what are the incentives behind why, in Silicon Valley, the big blockchain VCs are systematically investing in frauds, Ponzi's, and useless technology. So if you want to learn more, we just posted the link there. But Joshua, what's your take on this? Why is this happening? What are the big problems here?
So first, I'll say I haven't hung around many Silicon Valley venture capitalists or totally understand that. But from an outsider's perspective, and being inside the crypto space and understanding that a lot of them have jumped into these coins, it looks like to me is kind of like the herd mentality that, well, numbers going up, so I need to jump in, or I have FOMO, which is fear of missing out. I think that's probably what's going on. I do know that the culture is people like to follow each other with the big names. I observe that, and it seems like that's kind of like in hyper mode where, okay, one of the top firms invests in, say, Solana, and other ones pile in because, oh, well, they did it, so it must be good. And that's probably cutting down. I mean, I'm just theorizing here, but that's probably reducing the due diligence to near zero. And I think that's evident in the FTX issue from a few weeks ago.
Yeah, cool. So independent of where the big venture funds are, throwing around cash, what do you see as some of the biggest opportunities in the Bitcoin space that have yet to be worked on, or have any startups, that we've seen yet? And specifically talking about examples that are specific, informed by, your 6 years as an ERP consultant, I think would be greatly appreciated by the audience today.
Yeah, so of course I'm biased because I mostly work with retail type clients, but to me, this is going to take some time, but another constant thing we had to implement was EDI, which is electronic data interchange, meaning how do different businesses communicate different orders to each other. And that process, especially when you're upgrading or changing business software, is really difficult because it might have worked with this software from the 80s or the 90s, but tech has evolved so much, and especially if they're using that opportunity to change the software, upgrade it, this integration software to talk between different businesses, it's just a mess. So that's something that we constantly encounter. The same thing applies to credit card integrations, but more simply, how do vendors communicate different orders? And one of the things that fascinated me was Bitcoin could be used for this. Obviously, we're going to have to get past a lot of this GDPR stuff and break through the mindset of encrypting data on chain or hashing or whatever. To me, those are technical issues that will be worked out. But it makes so much sense to have an immutable data carrier for this type of stuff because it will reduce the triage on both sides when there's issues, which is, when we do these integrations, 70% of the time it works, right? It's the 30% of different errors and why they went wrong. That's where the work and the money and the time and resources are spent. And when you have one immutable record with some hash, a global unique ID, that will simplify a lot of this stuff. But I tried pushing some of this stuff towards the end, but I run into the same stuff that people run into today when they pitch Bitcoins that, well, we're going to use Hyperledger, intranets, fax machines, that sort of stuff, right? That we'll just do it the way we've been doing it forever.
Yeah. So I know right now you have a portfolio of, your own products, advisorships, power userships across different Bitcoin products. If you were forced to drop all that and work 24/7 on one startup that leverages Bitcoin, what do you think that would be?
It would be a video game for sure, where the assets are on chain. I've loved video games since I was a kid, especially the RPG type games. Think Final Fantasy or Dragon Quest or whatever. To me, putting that stuff where you have records and true ownership of, say, the game items is a fascinating concept. And I just think that, many blockchains have tried to do gaming, but a lot of them don't work because of the scalability problems. But that would be it. Because I've had a dream of being a game programmer since I was a kid.
Cool. What advice do you have for entrepreneurs building a venture scale business leveraging Bitcoin?
So I think one of the things that has become clear to me from building different apps is that unlike other startups, it depends on what you're doing, obviously, but you can probably make money from the first hour in when you release the app because of uh, the frictionless nature of Bitcoin. So when you release an app out there, especially if I'm not saying make a significant amount of money, but I think mentally, even seeing cents roll in, dimes, quarters, dollars, I think that does something for people. Not only does it show, okay, people are willing to pay for something, but mentally it says, oh, well, there's revenue. And I know that that's a delayed type of thing, especially in most business and startups today. I mean, that delay could be days, it could be years before they start making revenue. But I think this changes that. And I think the whole unseen concept applies of economics is that, well, we might say,
Yeah.
oh, well, it's not important to make those pennies early, but we don't know how that will morph the mind of the person to say, oh, well, if I make $1 doing just this one little thing, then I can tweak it a bit and make 10. And then I can tweak it more and okay, now I make 1,000. And then it just kind of builds on itself. So I think that is probably the biggest thing is that from the very beginning, you can have revenue.
Yeah, and that's been really interesting in terms of the opportunities we see at Unbounded, where the vast majority of companies we've invested in and that have come on our plate have actually been revenue generating. Some have been extremely small, we're talking about maybe just literally dollars and cents. But, we've seen now with some of our, fastest growing portfolio companies, how those just starting out with dollars and cents really adds up. And I agree. I think in general, due to just the style of kind of the consensus Silicon Valley style venture capital, they've taken a model that is really good for a pretty small minority of tech startups and broadly applied it to a lot of different companies, such that they throw a lot of money at something where you're not expected to gain revenue until some later stage. Where for I think most businesses, having that feedback loop of actually making money from your customers, crazy thought, actually make money from your customers, could be so valuable at such an early stage. So that's great that, Bitcoin makes that more possible. And, something we're excited about, Joshua, kind of in line with you working on credit card implementations, which is, think about what orders were like for non-in-person based business before credit cards. You're talking about extremely high trust, where effectively the minimum transaction that you can do is maybe like $80, $100 given wire fees, if not a lot more than that, practically speaking. So what credit cards did was open up a whole world of business where that minimum viable transaction went from hundreds of dollars to maybe $1 or $2. And now with Bitcoin, that minimum viable transaction is a tenth of a penny. And hopefully we can continue to bring that down and see kind of these new businesses flourish. So last question for you before I open it up to the public / just for my own edification, ask you just questions I'm curious about personally. When you're not advising Unbounded Capital, what are you up to? And feel free to plug as many things as you would like and throw any links in the chat.
Yeah. So you said what I'm working on as well. It's as to fun stuff.
Yes.
Yeah. So I've got 4 different apps that I maintain right now. One is called The Morning Run, which is it shows kind of token stats as well as a BSV price, but it has like a real-time classified section where people can post a tweet and it's like a bidding auction type thing. So, price is set initially at a tenth of a penny, and then people can just kind of post stuff on there to try to get exposure to, because the idea is that people come to the site to check the prices of these different tokens. So you can kind of they get bid up, right? So over time, it's like a rolling 72-hour window. I mean, I'm not explaining it very well, but that's kind of how think classifieds, but real-time taking of slots with micropayments. I have another one called Winbell.app. It's a simple RSS reader and bookmarking app. You pay a penny to put an encrypted, trimmed down web page on the blockchain, and it's yours that you can consume anytime. So it's kind of like Web Archive. And you just pay a penny to do it, and you have it in your app. As long as you have access to it. So, and it's back, and I'm able to do cross-device sync because I'm using blockchain instead of what Google or Firefox do is they put it on their servers, right? That's the only way they know if you were to use it on mobile versus on your computer. Another one is an open source Bitcoin wallet that I built. That was mainly for communities to just push development along. It's called Teak.run. And then the other one is a old school themed social media client that interfaces with the blockchain called retrofeed.me. And that's kind of more of what that video game type of vibe. That was the first app I built. It's kind of a proof of concept. And it's just kind of sitting there, get some usage, but it was really more for me to just learn that one.
Cool. Well, please do throw some links there in a moment. But to start, we have a question from David here in the chat. Can you provide an example of an app that would roll out and start making money, and how would others know about it? Maybe you want to talk about Windmill, or Windbell, or some of your other, examples of yours that you just mentioned.
Yeah. So yeah, for example, that Windbell, people started using that as soon as I released it with the bookmarking, and it was simple for them. You just put the URL in, hit create, and you link it with your hand cash. So it's just you hit the button to pay the penny, and then immediately it's there. It's done well. It's done okay. It's not tons of usage, but that's started to it's just daily churning, pennies and dollars or whatever. And for me, I haven't really pushed it marketing. It's not professional or anything. I've just been doing it via my own socials platforms like Twitter, YouTube, and Reddit. One other example that I saw that did pretty good revenue in the short amount of time, but it kind of fizzled out, was this game called Duck Creation, where you buy these eggs, duck eggs, and then you grow them via interacting with them on the blockchain. And if you do it right, it hatches into a baby duck and then grows. That app made like $1,000 in the first week, but it ran into some scalability problems, and just a lot of this stuff, because of the attention spans, just naturally kind of fizzles out if there's not a lot of long-term ways to keep engagement. So that's an example where these eggs were sold for 25 cents. Each interaction was a penny thereon, and yeah, like I said, they also sold encrypted diaries for $1, which was really interesting. Like it was kind of like a direct messaging type thing. And
how long does it take to create one of those?
So that one was worked off and on for a couple of years, but I would say if it was actually done full time, it probably would have taken a couple months.
And generated $1,000?
In about 2 weeks it did, but like I said, that fell off after that.
Okay. I mean, I used to always wonder about like utility, and it's like there's interesting things, but it's like, is it advancing social good? Like what's the long-term,
right,
viability, utility kind of thing?
Well, I think what's great about this, David, is just that the ease of being able to do this. So, if you tried to make what Joshua tried to make 10 years ago, it wouldn't even be possible. But if it somehow was, you'd be spending maybe 1,000x what Joshua spent to make that happen in terms of time and capital. So even though that specific app didn't end up providing a lot of utility to the world, happy to talk about our portfolio companies that, of course, that we think are, and many of them started that way of just like, hey, we're about to launch something, and we think this could be really big, and ended up being quite big. So like DXS, a company you might have heard on a previous webinar of ours, we were chatting with the founders before they even launched it publicly, and they've now done about $4 billion of trading volume on their platform, primarily from folks in frontier markets, given the fact that they can trade or invest in increments as low as 1 cent into U.S. equities and U.S. equity derivatives. So in terms of talking about a big impact, that's still, I think, a tiny pittance of where we think Bitcoin is going to go and what's going to do. But billions is it's not chump change.
Fair enough. Thanks.
Of course. Okay. So for any questions, feel free to, take your camera off and ask them like David just did, or drop something in the chat. So yeah, Joshua, do you want to tell everyone on the webinar what you're doing for Unbounded Capital?
Yeah, so I am a technical advisor So that started about a month ago. And I join you guys on weekly calls as well as calls with different entrepreneurs. And I'm now a voting member as well on the committee, on the investment committee.
Yeah, and then helping with sorts of technical diligence about kind of long-term issues. So Richard, as part of all that, the investment committee now consists of Joshua, myself, Dave, and Mike Hennessy. If no questions from the audience,
Zach, I got
okay.
a question.
At least two questions are coming your way, Joshua, or my way.
So I've been doing this for a long time, and when I see sentiment changing, and it's more than sentiment, when underlying ideas of fairness and trust and so forth get eroded, and I've been, well, I was a practicing physician from the mid-70s on, and been investing family office monies from the mid-80s on in all kinds of companies. Had a data communications company doing LAN-WAN integration and cancer. So I've seen a lot of different technologies and expectations. And then when things happen that are unexpected, but understandably unexpected, and people go, well, the clinical study, people get over it. But when the things that go wrong have to do with not just failure on the part of judgment, but in many ways, just irresponsible behavior, that unwinding takes a long time often to rebuild. Now we're in an environment where there's such a sense of fear of missing out. Oh, the equities are going to come back. I mean, discounting the reality that there's a recession ahead and the market gyrates. When I was younger, a 10, 15 point move in the Dow was, wow, 15 points. Today, it doesn't even register. The point that I'm getting to is you younger guys, are looking at this, and whether it's the Winkelvosses or whether it's Mike Novogratz or all these other folks that I've met over the years, the prevailing sentiment is, hey, well, that's what happens when you're trying to put new things into place. How you think that the trust gets reestablished? Because that's not easy. You can have the technologies, you can have all the compelling reasons why we should do with DeFi and all of that, what they're doing with M-Pesa and Kenya and all of that. But when some fundamental trust structures get shaken or broken, it's not easy. I'm just wondering how you look at that.
Yeah, so I think that if we had the point of view that, DeFi and crypto was doing a lot of good, and then you would need to have that trust rebuilt, and that would be really, really hard from where we are right now. We do not trust crypto at Unbounded Capital, and we have been very clear on that for literally like over 3 years now in all of our writing and all of our investing. So we actually view this as a really good thing that the trust is being broken in what are fundamentally primarily glorified Ponzi schemes and companies that make money off their speculation. I think it's great that the trust is broken, and I hope it never gets repaired, so we don't have all this capital go to waste into companies, like FTX and, the various Solana DeFi ecosystem companies that, Sam and the VCs.
But you understand, Zach, if
yeah.
people begin to not trust the chemotherapy, they often don't trust the antibiotics. If they don't trust the anti-inflammatories, they often don't trust the antipsychotics. Things spill over because people can't absorb all the nuances like someone like yourself and Joshua do. So there is that contagion, to use a medical term, effect. And you can be right, but dead right. I don't know. I don't have an answer, but what you're saying, which is, okay, let it hit the wall and crash because it shouldn't have been there in the first place. Humpty Dumpty and all the pieces. How do you put them together again so that what should be working is given the chance to breathe fresh air?
Yeah. So again, I don't want to put together the pieces for crypto. I understand what you're saying in terms of a lot of people kind of conflate companies leveraging blockchain to do incredible things with this
and
whole
they
crypto
conflate
world.
Crypto with blockchain, with DeFi, with digital assets.
So the even before this whole FTX collapse, still a very tiny minority of investors saw the opportunity that we see in front of us today. It's exponentially more investors than what we saw 3 years ago and 2 years ago, but compared to capital in the world, smart technical minds, it's a very small minority still today. So ultimately, what we think is that it's going to be the utility of successful companies. So, for example, this portfolio company of ours, DXS, they've done 4 billion of trading volume now. That's an incredible opportunity, but still not big enough where it's okay. It's too big to ignore by the entire fintech community. Or Handcash, for example, that has, well over 100,000 users now and are facilitating, micropayments for all sorts of games and companies. They're doing great. I think they have the potential to scale to be this incredibly large company, but right now they're still not big enough to ignore. Once you get one of these companies that has no crypto involved at all as part of the user experience and is widely loved and ubiquitous, that's when the narrative changes. And that's what we're betting on. Not that trust rebuilds in this crypto thing, but just that people like great companies, and then the smart, sophisticated investors kind of peel back and learn, oh, how could Handcash disrupt all these payment processors and all of these other solutions? Oh, they did it by using Bitcoin. Well, I thought Bitcoin was this, number go up, digital gold. Well, actually, no, it's this other thing. So that's, I think, how it happens, David. It's not by getting the investors.
I get, and you're consistent with what you're saying. And I'm not making any comment about Unbounded or the portfolio companies in Unbounded. Remember, when things start to fall apart, there's a lot of money to be made on the short side. There's a lot of money to be made on seeing things crumble, and then the people come in, the receivers and auditors and lawyers and all of that. And once the train comes off the track, a lot of people get rich picking up the pieces and all that. So it can take longer than one might think, while the good things you're talking about finally get a chance to get their message out.
Yeah, and they're separate things, like right now you can make a lot of money finding ways to effectively short the biggest crypto tokens and biggest crypto companies with a lot of risk, but there will be people that make a lot of money doing it, I'm sure.
Right.
We tried to be briefly at the beginning of Unbounded and realized that was not for us, but we think there's much better long-term upside, and it makes the world a much better place to take the long side of the things that are working. And simultaneously, while Solana, the FTX ecosystem, everything is completely collapsing and imploding, these incredible companies leveraging kind of the original scalable version of Bitcoin are doing great things independently. So I understand that most people aren't going to see those nuances, but our job is to make sure that just a increasingly smaller percentage of people do, and then once those people start to make more money off that thesis, that's when I think things will really change. And you don't have that until you have a company that becomes not necessarily a household name, but at least a household name within kind of, the more technical circles. So.
Well, the big money to be made now, if one could find an ETF for it, would be to invest in a basket of the law firms that are going to be appointed into receiver positions that are going to be working this thing for the next 7 to 10 years. It happened when I was in medical school with the tobacco companies. Before that, with the automobile companies with seat belts. Eventually, you get past all of that. Maybe these days it just happens that much quicker, but this unwinding is going to take a while. I really hope that the good things you're talking about, bringing more people into the system, which is what all of this technology should be doing, and having people that are trusted and actually act with maturity in the positions of bringing these technologies out. I hope that happens faster than slower.
Yeah. And
it also puts ammunition in the wrong political hands, I got to tell you. And then there's bad behavior there that compounds it. But anyway, I'm not a pessimist. I'm just trying to be a realist here. That's all.
Oh, for sure. Yeah. And I think, a lot of it is about the incentives, where like, if you could raise another fund investing in FTX and Solana companies, you're going to just keep doing this until the music stops, So I think what's great about now is there's a lot of people that were really excited about crypto and now lost a lot of money. And what I've seen time and time again in this space is once you've made money off a thesis, it's really, really hard to change that thesis until you've lost money. So ultimately now we've had a lot of investors that have heard our kind of consistent thinking on why we're not fans of crypto, but big fans of blockchain scaling. And they kind of passed it off and it was like, oh, my friends are investing in these guys. And, my friends are really long on Solana and these are where the smart people are. So I'm doing this. And, maybe it's what we said made sense in the moment, but it was hard to carry. Now that they lost their money listening to their supposedly smart friends investing in these, sophisticated funds that had, 10 plus 50% of their working capital for the entire fund on FTX, they're like, okay, well, maybe let's revisit the person and the thesis that didn't lose anything from this. And that's what we're really seeing now. which has been great, which is, yes, is there some kind of short-term backlash against our portfolio companies? Honestly, more just because of the global venture market, independent of crypto, more so than this, but not trying to say that there's not some negative effect from this. But I think not even long-term, but medium-term, the number of people that are going to rethink their crypto investments and not be like, okay, baby out with the bathwater, but let me rethink my blockchain thesis. That's going to get a lot more capital, the types of companies we're really excited about.
Thank you very much. Zach.
Okay.
Appreciate it.
Cool. Okay, Joshua, I'm going to put it up to you to give, not for, technical entrepreneurs like before, but if there's a piece of advice, most people on this call are, active investors in, venture capital of some sort. What advice would you give them when evaluating the blockchain and crypto world today?
For me, I think it's very related to the exchange you just had with David, is that what is the company or product dependent on the price, the asset that it's implementing? If so, that's probably a red flag. Because that's something that I don't think, I know that some of that stuff bleeds into some of the traditional companies like with oil prices or, gold and silver mining, but, usually they, especially the big ones, have some risks controls when they're dealing with commodities like that. But, I don't think it's not predicated on crude oil being $100 a barrel, for example, or gold hitting all-time highs, right? If you're a miner, that's what I'm trying to say. But I feel like 99% of these companies that are going to be affected by this recent crash were essentially dependent on a high coin price. So DeFi, right? It's just trading one coin for another, arbitrage, this sort of stuff. Yeah, some of it could just be volatility, natural volatility of assets, but I think that's the question. And, the app you mentioned, DXS, Haste Arcade, for example, that's kind of a micropayment gaming platform. The price doesn't matter of the asset. The revenue is the same. It's all the same. Nothing changes if BSV is $2 or if it's $2,000. It doesn't change. And I think that's the important thing: is can these companies continue to make money regardless of where the price moves? And I think that's the key. And honestly, I don't think you're going to find any companies outside of BSV doing it. You might find one or two, but as I mentioned before, these companies that have tried to do games, for example, I've never seen them get out of beta or closed alpha, just because it's not possible. If you're trying to do lots of volume, you're going to get eaten alive with these transaction fees or break the chain like they done with, say, Solana or some of these other chains.
Well, I think that's a great note to end today. Joshua, thank you for your time. Everyone on the call here, thanks so much for joining. And next week, on Tuesday, December 6th, at the same time, noon Eastern, we're going to do another webinar where I'll be interviewing Jack about his piece that we posted earlier. I'll repost that again right now, as it's a fairly short piece and I think is pretty timely given the conversation today. So thanks for joining, everyone, and have a great rest of your week.